Hello and welcome to The Point of View. It's your favorite current affairs show on Ghana television. It's live on Citi TV. It's an interactive show. We get the right guests. We ask them the right questions on issues that matter to you, and you get some useful insights. Tonight's show is a show we want to hear from you regarding the state of the Ghanaian economy. And we want to listen to the opposition on where Ghana's economy is and where it is headed. And I have the wonder boy of NDC politics, MP for Bolgatanga Central, Honorable Isaac Adongo, is my guest on the show. But I'm going to do it in a very interesting way tonight. We're going to get him to speak about various issues within the time allotted. If you're watching, you want to contribute, you can either send us a comment on the WhatsApp number on the screen, or if you're watching on Facebook, I'm sure you guys will be arguing over which party did better. Let your comments be decent on Facebook, and I'll read as much as I can. So when we come back, we'll be speaking to Isaac Adongo. Stay with us. Welcome back. So I'm sure a lot of you will be surprised to know that Isaac Adongo is just a first-term member of parliament. He's really risen to a point where he even has a whole economic theory. I remember we tried to run a show called Baunomics versus Adongonomics. Well, for some reason, he pulled out of that show. So I only had one Baunomics, apologies. I didn't have an Adongonomics. So he's here to talk a lot about Adongonomics. Great to have you. Good evening.
Good evening, Bernard.
So you've just been in parliament for one term. And you're already a thorn in the flesh of the government.
Well, I think it's because I belong to a very strong team.
Okay.
So I have the support, and I have the team that does very strong research work to support my work. And so it is easy to function.
Oh, you have a research team?
Yeah, I have a group of people scattered all over the country who are supporting my work. And that is...
A few years ago, MPs didn't even have offices. A lot of them had their books in their car boots. So when they wanted to prepare for budget, they would go and open the boot and check. But now I notice all of you have offices, you have assistants and research stuff. How does that help in the parliamentary work, especially on something as important as the economy?
Yeah, because the MP cannot have the time to do a lot of the independent research that you need to be able to address the issues as expected. Often, some of the issues that come to you are so varied that you need expertise from different group of people, and you need to cultivate some of the expertise outside of the political party. Okay. And it depends on how you are able to engage the technocrats. And once you engage them and you have a very common ground for meaningful conversations, you will begin to glean a lot of facts and a lot of expertise from them, and you see how you can leverage that in your work. And
just finally, usually most MPs are lawyers. But I noticed that in Ghana politics today, MPs with political and economic background are becoming more and more important. If you look at the work of parliament, how critical is the economy versus, say, the legal side of things and other things? If you take 10 deals, how much does knowledge in the economy, finance, and banking play in the work of a parliamentarian versus the other sectors?
So the committee that is basically in charge of the economy and finance is the finance committee, which is a standing committee. And the finance committee does close to 65% of the work in parliament. Wow. So that should give you an idea of how important that is. But of course, you need lawyers, you need architects, you need engineers, you need doctors, even on the finance committee, because often you would have a transaction that comes before you, and you need the people in the health sector to be able to make you understand, because you need to understand the issues in order to leverage your understanding of finance and economy to make the right decisions. So you need to have this blend of expertise on the committee. And so when you have the lawyers, they are able to look at the text and be able to tell you what the pitfalls are. So that blend helps you to then leverage your expertise in finance and economy to...
So we have public accounts, which is usually headed by a minority person.
Minority, yes.
And then you have a finance committee, two key committees.
Yeah, generally finance and public accounts.
And you're on both or just finance?
You cannot be on both because the public accounts is the auditor of the finance. Okay. So you cannot be the spending officer and at the same time auditing yourself. So you can't be on both finance...
So you're on finance?
Yes.
Together with Cassiel?
Yes, that's my ranking member.
And the chairman is
Dr. Makesibe. Now he says he's a doctor emeritus. So
he's also an economist?
Yes, he's an economist. Yes.
I see. And public accounts is headed by a minority MP?
Yes, that's our deputy minority leader,
James Abeji.
Yes.
I see. So what is the state of the economy, if I ask you as NDC, so I'm just asking you basically from the NDC minority point of view, where are we as an economy?
I think you should be asking me as a Ghanaian, where are we in terms of the economy? You understand this better. Normally, you cannot assess an economy based on a one-off annual activity.
Okay.
You need to look at the trajectory and see whether the progress that was being made was sustained or that there is something that fundamentally is beginning to impact the trajectory.
Okay.
So you would recall that when we went into the IMF, there were serious external shocks to the economy. We needed to find a way to deal with balance of payment challenges. Our reserve situation had to be addressed. We also saw that we needed to improve monetary policy in order to make sure that our inflation targeting, our financial stability was improved. Now, in the midst of all of that, you would see from 2015 that inflation was trending downwards, right from 2015 to 2016 to 2017. You will see that interest rates were trending downwards. You will see that our reserves were improving. You would see that the cedi was becoming stable, and consistently the depreciation was slowing. Now, that continued up to 2017. It cannot be a miracle because you can't stop that trajectory because a different government has taken over power. But if the policy options that were creating that environment are not sustained, you begin to see that things begin to reverse. And so you will find that even though your GDP went up to about 8.1% in 2017, you are now beginning to see a nosedive in terms of what you came to meet. So the 2017 numbers have to be looked at in terms of the trajectory that you were already experiencing. Now, by 2018...
So we shouldn't credit the positive 2017 to this government because it was a trend that they inherited?
It was a trajectory.
Interesting.
Yes, it was a tragedy. I mean, if you take, for instance, the manufacturing sector, okay, with the doomsday situation, we're beginning to pick up. So by 2016, you'll notice we're doing 7.9% in the manufacturing sector. That continued to 9.5%. Okay. Now it is down to 4%. So it means that the level of investment and the environment that created that trajectory has been reversed. So you begin to see a sharp decline in terms of the growth numbers. And that is not magical. So if you take, for instance, the cedi was beginning to stabilize. So you moved up to 4.8% way back in 2017. Then suddenly 2018, you reverse all of that to 8.8%. And as we speak today, we are doing double-digit depreciation of the cedi as of November. And just today...
Double digit?
Yes. We are not doing...
I thought it was 10%.
We are doing 10 is what? That's double digit.
Yeah, that's of course, 10. A bit north of single digit.
10.35. But you see, just if you pick just the last 2 days, 25th to 26th, Bank of Ghana reports the quotations on their website, and they show the median of the quotations. Suddenly, you saw that this figure just increased sharply from a quote of about 3.5 to 5.3 to 5.5. That's a massive jump in 1 day. And that is just 24 hours, between 25th to 26th of November. Okay, that is very worrying. What that is telling you is that the cedi is suddenly coming under very intense pressure. And if you look at the numbers, you would notice that somewhere around March, there was a lot of euphoria when we borrowed $3 billion. And you found that suddenly our net international reserves that was covering the cedi was about $6.8 billion. Now we are doing $4.7 billion. Now, we have already depleted close to $3 billion of our net international reserve. That is not good news. And if you are spending all that money to support the cedi, and the cedi is still doing double digits, can you sustain that?
But you admit that the double digits is doing is pretty lower than what you experienced between 2015 and 2016.
Yeah, so that's what I'm saying. You take a trajectory. If you take a trajectory, you are moving from 15, you came down to 4.7, okay, and now you expect 4.8 to continue to moderate, but not to exacerbate. And where we are heading now, after just 1 year of a true NPP regime with the trajectory reversing, is showing that we are in difficult times.
Let me show you something. So you are saying that what we experienced in 2017 was a natural consequence of the change we had already started seeing from 2015?
Yes, policy interventions.
Let me read something for you. So if you take the IMF's own when they completed the last review of the extended credit facility, so this is March 2019.
Yeah.
After the press release, they have 100 and something page document which then talks about Ghana's background. So permit me to read. Context: Ghana, good progress, ongoing agenda. Just a few. The first paragraph says Ghana is concluding its 4-year EFC supported program with significant macroeconomic achievements. Figure 1. When Ghana entered the program in April 2015, this is the middle of President Mahama, the economy was deeply affected by continued volatility, fiscal dominance, severe commodity price shocks, and a rapidly depreciating exchange rate, in turn compounding an adverse debt dynamic. Initial progress towards restoring macroeconomic stability under that government was reversed at the end of 2016 when the election-induced cycle generated further fiscal slippages and additional macroeconomic instability. Then they say much has been done since to place the economy on a more sustainable path with significant gains in terms of growth. So my emphasis is that the change you speak about from 2015, the IMF said it was reversed at the end of the election. So it wasn't a straight line based on what they are saying.
You see, the IMF makes specific emphasis on what was reversed. And he talks specifically about fiscal policy. Okay, so that is not the generality of the macroeconomy. So, and you need to ask the question, what were the projections of the IMF itself in terms of Ghana's own growth trajectory at the time we were leaving power? Okay, are the indicators still pointing in that direction? That is what you need to ask, because the IMF was basically saying that we had made progress, but pointed out one area that it had concerns. And that area doesn't define the entire economy. Does it define monetary policy? Does that define your external environment? It talks about volatility. What was the level of volatility by 2016? Okay.
They just said election-induced cycle generated further fiscal slippages, as you said, and additional macroeconomic instability.
Which is what?
They elaborate in other paragraphs. I don't know if we have time.
Exactly.
But then they talk about, but they said much has been done since 2016 to place the economy on a more sustainable path. And they are reporting March 2019.
You see,
with significant gains in terms of growth, inflation, fiscal performance, and external. So they mentioned 4. Yeah. Growth, inflation, fiscal, which you refer to, and external. So they are saying that in these 4 areas, much has been done to place the economy on a more sustainable path.
You see, and I want to ask you a very simple question. Which consultant has ever told you he has failed before? What do you mean? The IMF is a consultant to Ghana. The IMF is exiting and is looking for another job in another country. You expect them to come and tell you they failed in Ghana? You need to look at the indicators and not be listening to them. You see, that is why when you exit power, you will know your true colors with IMF. It's a quasi-diplomatic institution that has its own language. And you cannot be looking at IMF telling you all this. Okay, so when they said that, let me make my point. When they said that, yes. when they said that, yes. Growth in 2018, yes. 2017 was what?
So I'm coming.
8.1%. No, let me finish. It was 8.1%. What was growth in 2018, a year later after the IMF had said we're making progress? We're now doing 6%. Okay, is that what the IMF is saying, that a lot has been done to improve and create sustainability? And even with that, what was the growth drivers? It was oil. Okay, so did IMF come here to create oil-dominated growth? They came here to create growth in the real sector, and the real sector wasn't performing at the time they were exiting.
But so, if you want to be fair to the IMF, they also admitted in that same thing that public debt is still elevated, reflecting the expensive cleanup of the financial sector. Ghana is considered a high risk of debt distress. I've put this to the finance minister. The cleanup of the sector is yet to complete. So my point is that if you say that because of the positive things I've read, it suggests that they are just trying to do consulting. No, they did point out in this same reading, they did point out some of the things that are still problematic.
I'm pointing to you the macroeconomic indicators for you to now tell me whether that is the sustainability they were referring to. And I'm saying that when your growth moves from 8.1% to 6%, is that why IMF calls sustainable? If your manufacturing sector declines from 9.5%, okay, down to 4%, is that what the IMF says is sustainability? If the depreciation of your currency moves from 4.8% to 10.3%, at the time we're looking at something in the region of about 8.8%, and you're saying the IMF says this reversal is sustainable macroeconomic indicators, I am saying look at what the indicators are saying.
But if you take the indicators from this budget itself, so you see, you are talking about industry. Yeah. Mining and quarrying 2016 minus 0.
I'm not talking that. So I'm talking manufacturing.
I'm coming. Just allow me.
Yeah.
2017, it rose to 30.8. You are saying we should credit that to you because it was the policies lag. I won't argue with that. 2018, mining and quarrying went to 23.3. 2018, first quarter, 24. Let's take manufacturing. 2016, it was 7.9. Then 2017, 9.5, which you said. Then 2018, it came down to 4.1. Mm-hmm. First quarter, 4.0. It is risen to 6.5. It's
projected to end. We are not dealing with projections. We are dealing with actuals here.
Water and sewage, minus 11.8, 2016. 2017, it went up to 6.1. Declined again, minus 3.6 in 2018. Declined to minus 1.0. But electricity, 2016, minus 5.8. 2017, went up to 19.4. You say we should credit that to you. 2018, 5.5. 5.1. So it's a mix.
No, it's not a mix. You see, all the numbers you are quoting, no, the numbers you are quoting to me, after 2017, they deteriorate. Okay? They deteriorate after 2017.
Yes.
Okay? And 2017, yes. What did the government do? The government, you are now putting together 110 ministers. They got their budget approved on the eve of April 2017. Mm-hmm. Most of their tax measures became operational somewhere around August, September of the year. So basically 2017, there was nothing done.
Okay.
And you saw a lot of growth. 2018, you now have a full implementation of your policies. And that is the time your growth consistently declines almost on all the sectors that you are pointing at. And I'm saying that don't listen to the IMF. Look at whether the data speak to what the IMF is saying. And the data is clearly showing that there's a reversal of trajectory. And this is not my data. This is the data of the Minister of Finance, which is basically speaking to a deterioration. And I'm saying that whether the IMF says so or they didn't say so, what are the numbers showing? It is not the English. It is what the data is pointing to. And I haven't seen any data that you have shown that suggests that after 2017, there has been improvement. In fact, after 2017, we've lost on almost every single indicator in terms of comparison to the trajectory that we're moving. And that is worrying because if that continues, if that continues, I don't know where we'll be headed.
But should we look at just the figure for 2018? Because you already said to me that we should look at trends.
So that is
the trend is that 2017 was the highest.
Yes.
Then it comes down and starts picking up.
Which one?
All of them. All the things I read for you start picking up. Second quarter of 2018.
Let's pick them one after the other.
Mining and quarrying. 2017. 30.8.
Yes.
2018, 23.3. Yes. It comes down.
Yes.
2018 first half, 24.7. That's gone up. Okay, then they have without oil or with oil.
Yes.
Again, 80.3 2017. Comes very low to 3.6 2018. Picks up to 18 first half. So you see, the same thing. Let me come to even electricity. Minus 5.8 2016. Goes up to 19.5 2017. Picked 5.5 and then goes to 5.1, which is a decline. So you see, it's a mixed situation. You can't say everything is falling after 2018.
Bernard, I am saying that. I've seen this document. Yeah. I'm saying that, Bernard.
And this is the budget.
Yes, I'm saying, Bernard, if you look at the trajectory, you cannot just after 1 year reverse everything and say you are now going up. And I'm saying that the numbers you are showing at the far end are projected numbers.
No, what I'm showing you...
They are projected outturn. They are not actual outturns. But if you look at the first and second quarter, that is where you see that nothing is happening. Then the man realized that his first and second quarter are not performing. He turns himself into Ghana Statistical Service and conjures figures for projected numbers. What did he project at the beginning of the year? Where are we? So I'm not dealing with his projected outturns. Okay, because his projected outturns, he would come and tell you something that will look good. I'm looking at the actuals.
What about inflation?
The actuals...
Let's leave growth. Yeah. Let's talk about inflation. How is inflation doing? It seems like the trajectory has continued. You said inflation started trending down from 2015.
Yes.
I won't argue with that. But it has continued. Yeah. It hasn't gone up.
Bernard, in 2018, you decided to rebase inflation.
Yes.
Okay? When you rebase inflation and you have not gone back to credit the gains of improved methodology that is now giving you a better outlook on inflation, you are not accounting that for historical numbers. You cannot compare them. And the Ghana Statistical Service itself makes a disclaimer that you cannot compare the inflation we are getting today beyond this year. It's not my saying. You see, you have now decided that you know the Ghanaian better than we knew the Ghanaian in 2012. Okay? You are now saying that we know the lifestyle of Ghanaians better. You are now bringing items that have a much more higher moderating influence on the basket of goods and services. You have now adopted a methodology that expands the market reach. So you are now basically going into rural areas to add rural markets.
But that was GSS decision.
Yes.
That was it wasn't.
Government doesn't determine inflation. So we are looking at the number generated.
Yes.
And I'm saying that you are now expanding to markets that are in rural areas. And general markets in rural areas are cheaper. So that moderates your price outlook. Are you getting the point? So you cannot now be saying that you will not give me that benefit of the percentage points that you have gained in order to compare me to you. And
so if they hadn't changed the basket in 2018, are you saying that the inflation trending downwards wouldn't have continued downwards?
You're asking us to now...
No, you are the one saying that they changed the basket in 2018.
And they changed the market. So it means that... They changed the methodology. Yeah, and I'm saying that...
But so hold on. We are both... if you can do a test and say, let's use the 2012 basket and see whether the inflation that they report for 2018 will still be the same. If you've done that work and you can show it to me that...
That is not my work.
But you say that the inflation is a product of the change in the basket, then you should have done the test of the other side.
Bernard,
it's a simple matter.
Bernard, I'm not going to turn myself into Biomia to calculate inflation.
No,
that is what you're asking me to do.
You are saying that they've changed the basket.
The power to calculate inflation is vested in an institution.
So let's take what they've said.
And that institution is saying that the inflation they have calculated for 2019, by virtue of the change in methodology, cannot be compared to historical numbers until they have reconfigured historical numbers. I am not saying it. So are you now saying that you are challenging what the Ghana Statistical Service is saying?
No. So what is the inflation figure you will use for working? If you are going for a bank loan, what inflation figure will you use?
That is an additional work that has to be done by Ghana Statistical Service. It's not my work. And until that is done, you cannot be comparing apples with mangoes.
But you see, changing of basket is not unique to this government. We change baskets almost every 7 or 8 years.
You see,
what's the problem with that?
I haven't said that. You see, you can say inflation is 7.8% or 7.7%. You are right. But when you say that inflation is the lowest in 27 years, then you have a problem.
Who said that?
The finance minister came and said it. Dr. Baumia was the one who started it. The president repeated it.
The 7.
The 7.7 is the lowest in 27 years. And I say it's not even the lowest in 2 years.
Because they changed the basket.
And I'm not the one saying it. The man who calculated the inflation that you are using is saying that if you use to compare that inflation beyond 1 year, you are on your own because that methodology cannot be applied. I am not the one saying it. So if you still go ahead to use it, you are being mischievous. Are you getting the point?
I was just talking about the trend you said. See, because you said there were trends. I was just using trends.
Only recently, I saw the governor of the central bank comparing the current inflation to his medium-term target of 8% plus or minus 2.
Yes.
When you were calculating the 8% plus or minus 2 medium-term in 2012, did you know that the base would be 2018? Did you know the number of basket of goods will change? Is it the same you use? Did you use the same market to arrive at that? So clearly, your 8% plus or minus 2 has outlived its usefulness, and you cannot be comparing.
So they need a different target.
Exactly, you need a different target. And I'm saying that these are not my words.
Okay.
These are the technocrats that we all rely on. I am not about to do the work of somebody who disproved them and did something funny. But I'm saying that Ghana Statistical Service is saying, hold on. Just like you compare, you see, when we were leaving power, they said that debt to GDP was 73%.
Yeah.
Right?
Yes.
When they did the rebasing, and we took the benefit of the rebasing, we are doing far better than them.
Yeah.
Is that not it? So then you are comparing mangoes with mangoes.
But I'm happy you did that work when it came to the rebasing, because on the rebasing, you are able to use the pre-rebasing GDP to know that your debt to GDP is better than theirs. Which is why I was asking you why you didn't do that for the inflation.
I am not the one who did it. The same person who did the rebasing gave me...
But the rebasing is also about statistical service.
Listen, I don't have the capacity to do a rebase.
But the statistical service give you the statistical service debt to GDP ratio they are using is based on the rebased GDP.
Yeah, and I'm saying they went back and rebased historical numbers.
Okay.
And so you could not have a common basis to compare 2016, 2015 with years after the rebasing.
Fine.
Okay, so even then they'll tell you this is for old series and this is for new series.
Good.
You cannot now be using new series of inflation to compare old series of inflation. It is only a disingenuous person who would do that. And that's the point I'm making.
I want to take a short break. And when we come back, we'll come to your pet topic. Because I know you've been quite, indeed, when you did your lecture, you spent a bit of time on the financial sector. Your famous Adongonomics lecture. I have since put some of the questions you asked to some of the people I've interviewed. I've interviewed Finance Minister. I've interviewed Eric Nipa. I haven't interviewed the governor yet, but I guess he's addressed. So what I'll do when I come back, I will take some of your comments around the financial sector and I'll compare them to what they are saying. And we'll look at the health of the financial sector reform. In the meantime, if you are watching, what do you make of Adongonomics so far in terms of where we are? He says all the positives in 2017 are flowing from a trend that started prior to 2017. Although the IMF did say that in 2016, there was a reversal during the election. He says, be that as it may, the true size of this government is post-2017. And indeed, some of the figures came down. Although they started picking up, he says it's not enough. So this is Adongonomics chapter 1. We'll be right back. Stay with us. So we are talking to the MP for Bolgatanga Central, and one of the senior members of the Finance Committee, certainly one of the most vociferous in Parliament when it comes to the economy. And he's talking about the economy that we are running. And he says, really, the right person to ask is the ordinary citizen. So ordinary citizens watching us, tell us how you see the economy. Is it working for you? Do you feel things are going north or things are going south? Or do you agree with what he's saying? Let's talk about the financial sector. 2 audios. Finance Minister spoke about how much has been spent so far. I'm going to show you what he said. Then I'm going to show you what Governor said on Monday when he met journalists, where he said so far 95% of depositors had been paid. Then we'll take some comments on that. So let's hear Ken Oforiatta speaking about how much we spent so far on the sector cleanup.
Mr. Speaker, it was clear after taking office that we had inherited a financial system tottering on the edge of collapse, which was known to the previous government, but was negligently left unaddressed. The new leadership of the Bank of Ghana therefore moved decisively to restore soundness and stability to the financial system. For banks, savings and loans, and microfinance companies, 4.6 million depositors, Mr. Speaker, were at risk of losing their entire savings. The Bank of Ghana undertook a number of reforms, including increases in minimum capital requirement, revocation of the licenses of insolvent banks, resulting in the consolidation of banks from 34 to 23 by the end of December 2018. Consequently, we now, Mr. Speaker, have a banking sector that is well capitalized, liquid, and well positioned to improve the flow of funds in the economy and to drive private sector-led growth and development. This unexpected fiscal cost of the cleanup has thus far cost the taxpayer over 13 billion Ghana cedis in order to save the deposits of banks, savings and loans, and microfinance companies. It has also led to an unplanned and one-time increase in Ghana's debt stock.
So he talks about capitalization. He says the sector is now well capitalized and liquid. And then he also says they sought to protect depositors' funds, about 4.6 million depositors. Let's hear what the governor now said on Monday when he met the media.
I think the trouble that we currently have has to do with the fact that all depositors were made whole in the case of the banks, but we have had to operate with caps for the SDIs. And as you're aware, we have a cap of 20,000 per account. This is really the source of the noise that you're hearing about people not getting access to their funds. It's not because they are not getting access to their account, it's because there's a cap on payments limited up to 20,000. I should tell you that more than 95% of total deposits have been covered, are below this cap. More than 95% of depositors have had their deposits fully refunded to them. So there is just about a 5% of depositors who are holding very significant amounts of money and that have been, in a sense, caught under this cap. And unfortunately, those are the louder ones, and therefore, that's why you keep hearing that people are not getting access to their funds. But most people have had access to their full funds. At the end of the day, it's a question of the amount of resources that the government can afford to put up front. And the hope is that the receiver would be able to recover these funds from the shareholders and directors. That's the job of the receiver. So it is expected that at the end of that receivership process, those amounts that have not yet been paid would be taken care of by the proceeds that the receiver is able to generate. And therefore, his job is very important, that recovery job of the receiver, chasing loan defaulters, chasing shareholders that have misdirected funds. It's critical to meeting depositor full payments. And we must all give the receiver the necessary support to achieve that objective.
So Finance Minister earlier said the banks are more liquid, they are better capitalized. Governor is saying depositors are being paid, but the people who have not been paid, the amounts may be large. But in terms of the number of people who are paid, the lower people have been paid. You've always had a challenge with the approach of this government to the reform. So what is maybe give me 2 or 3 key problems. Why are you so upset with the approach this government has used in the sector cleanup?
If Ghana has 20 billion to spend, if Ghana has 20 billion to spend, and in a country where you struggle to create jobs other than NAFCO, and the banking sector provides the most sustainable jobs, where people earn very good money, and have 20 billion Ghana cedis to spend, I will not collapse a single one of them. Very simple. I will not collapse a single one of them. And to have collapsed 9 banks, now we are talking in excess of close to 400 or even in excess of 400 banks, financial institutions. Yeah. That is the first one. And I had earlier indicated to them that all that you needed to do was to set up a fund of 20 billion, encourage the financial institutions that are struggling to recapitalize to approach you with a proposal. You can go behind the scenes even without Ghanaians knowing. And often these type of things are not done in the full glare of the media. And do evaluation of those institutions and agree a shareholding structure that allows you to put money there. Run the banks with them. When they become very good banks, you give the banks back to them and exit. And you would have kept those jobs. You would have kept the confidence of the financial sector intact. You would have made sure that livelihoods are still maintained. You would have made sure that for 3 years now that the SMEs, the private sector, has not received funding. They would have received funding by now. And you would have made sure that you won't have a financial sector that is now decimated. The only sector now left is the banking sector. So the deepening of the financial sector that required us to have different layers playing that intermediation role and satisfying the Ghanaian businessman and the individual has been reduced to one sector now, and that is the banking sector. And yet, why is it that the savings and loans are really no more active? Microfinance are not active, okay? The finance houses are not active. The fund management companies are not active. So you expect all those monies that they were competing for in terms of deposit to be migrating to the banking sector. And you should have been seeing excessive growth in banking sector deposits because they are the only people left now. How come the deposits are not going?
So you're saying that if you have 20 billion to save the sector,
yes,
you wouldn't have, you use the word collapse, you wouldn't have revoked license, or in the way they did it was they appointed a receiver, essentially created a new bank. So they gave UT and Capital to GCB, merged 7 into consolidated. You didn't have used that approach. You would have kept all the old banks existing in their own name.
To be honest with you, Consolidated Bank is all that is wrong with banking sector in Ghana.
Why?
It's a very bad example of banking. If you have a bank that have total asset of about 8 billion Ghana cedis, but its loan portfolio is only about 34 million Ghana cedis, what does that tell you? Is that a bank?
They are putting the money into other things.
So is that a bank?
But that's because they are in their first year of operation.
Oh, so but if you're in the first year, you can have 8 billion.
But if you look at their financials, they put a lot of it in government long-term instruments.
They were forced to have government long-term instruments. They didn't put it there.
Because the bank they inherited had a lot of NPLs. So your first year, you don't give out all these loans?
No, Bernard. If you look at what we call the statement of affairs of CBG, that statement of affairs simply says that the banks that were all taken over, they selected certain assets and liabilities and put them together.
Yeah.
Okay, and then issued a bond to cover the gap.
Yeah.
That statement of affairs points to depositors' funds of 5.6 billion Ghana cedis.
Yes.
If he says that 95% of the people have been paid, I want you to Google CBG's financials and look at what they have.
I actually have it here.
And look at what is their deposit position. And you will notice that the monies are still sitting at CBG because CBG was giving bonds and they cannot pay.
But let me ask you, if you have 100 people who owe you, 95 of them owe you below 20,000.
Yes.
5% of them owe you above 20,000.
Yes.
Can't you see the value of the 5% of your debtors could be more than the value of the 95? If the 5%, one of them owes you $1 billion. So just saying that 95% of them have been paid doesn't necessarily mean that 95% of the 5 billion. Do you get my argument?
Yes,
so you need to look at the values, not the volume.
But you see,
you need to look at the value.
What you are doing is that you are falling into the trap.
No, it's simple arithmetic.
I'm just telling you something. You are falling into the trap of all that is wrong with what they have just done. You see, I put my money in a particular bank. I saw other banks and put my money in that bank. Do you get what I'm saying?
Yes.
So if that bank collapses, I am entitled to a receivership process that treats that bank separately.
Yes.
And you will sell the assets, realize revenue, and pay me my money. I may get 100%, I may get 2%, I may get 3%. So when you have 9 banks with different financial standing and everybody is taking the same amount of money, you are robbing Peter to pay Paul. And that is not receivership. That is an illegality. You see, what it simply means that you are using banks that have financial resources to support customers of banks that don't have financial resources.
But you haven't finished realizing all the assets.
No.
So you can't pay everybody now.
Bernard, I am saying that if my money was in a bank such as Heritage Bank, for instance, why shouldn't I get all my money? So you are using my money in Heritage Bank to support one of the banks that didn't have money. And I am saying that when you give me that cap, I will go to court and so I don't know these other banks. I know Heritage Bank. Can the receiver come and account in a transparent manner what is the total asset and resource envelope of Heritage Bank? And when you distributed it, how come I got 20,000?
But he hasn't finished.
No.
He hasn't finished.
Bernard, you are not understanding.
No, I get you. But he hasn't finished the process.
No. But you see, what process are you waiting for? You have 10 billion of a loan portfolio on all these banks.
Yes.
Bernard, are you suggesting that when the banks were being taken, people had gone to the bank to take money just the previous day? Those loans were functioning. They were current loans. People had taken loans for 3-4 years. Their businesses were running and they were servicing it. And they were not the reason the banks collapsed. So when you take the bank, the first thing you do is to profile all these loan portfolios and sell the good ones to existing banks that are spending a lot of money to look for these type of people.
Wow.
Let me tell you. And then, so you realize a lot of money out of this 10 billion. So Bernard, if Citi was part of those companies that had gone to take money to expand, to set up a TV station, and were servicing our debt, and for some reason the bank went aground, or you revoked the license, why? Won't you go and talk to another bank to say, Charlie, we had this very good customer.
So you don't think lumping together all the customers and giving them that cap is fair?
This argument of them chasing debt is self-created, because you cannot have a situation where CBG will say that out of the 10 billion Ghana cedis, they could not even find 5 billion good loans on the books to buy. And to manage that as a bank. So who is collecting those monies?
Let me just listen to Mr. Nipa.
And where are those monies going?
Let me, I don't know if what he's going to say addresses your question, but I'm going to give you like 2 minutes of what he said, and then I'll take your comment, because I asked him why he's using the approach he's using, what even some of the savings and loans companies even did wrong. Because don't forget, he's also a receiver, not just for UT and Capital, he's also a receiver for 22 savings and loans and 347 microfinance. So he's doing quite a lot. I interviewed him in August, so here's a quick excerpt of what he said. we just know generally that they are insolvent. Some are ceased operation. Are you able to tell us what happened? Because at least before they give you the patient to heal or to do corona, whatever, you need to tell us. So you're like a coroner.
Well,
yeah.
Interesting you say. I mean, before I was appointed, BOG had done extensive work and had identified some ills, all right, and of course we're not curable, and it got to a terminal stage, and it was passed on to me. One of the key things I do whenever patients of this nature, so to speak, are handed over to me is to undertake a complete diagnosis, a complete examination. So we on our own are doing that, and that is part of our situation assessment of these companies. We conduct a situation assessment of these companies to ascertain the state of affairs, the state of play, as at the dates of receivership. We do that with the aim of identifying, ascertaining what assets they have, types of these assets, location of these assets, conditions of these assets, and of course the value, potential value of these assets. We also do that to establish the total liability base of these companies and who the creditors are, what securities there may be over assets of the company, and so on and so forth. Quite detailed, a very extensive exercise, in the course of which, and as a byproduct, we are able to identify what caused the condition or conditions of the companies. And indeed, we have done that, and we realize that the story isn't any different from what we examined and identified in the case of Beauty, in the case of Capital Bank, in the case of Heritage Bank, in the case of Premium Bank. All right. It appears that there is a common thread, quite pathetic, but I mean almost the same issues. The underlying or the key points being that these companies are insolvent. Of course, with the exception of Heritage Bank, where they became, theirs was due to, I mean, their situation was due to some regulatory breaches and all. But largely, these companies are insolvent. And what does it mean? What it means in terms of, within the context of the Act, is that a company is insolvent when you consider three scenarios. All right. Mainly two.
So he said the companies were insolvent because they couldn't meet their liabilities, they were illiquid, and then they couldn't meet their arising obligations in the next 60 days. Now, he's suggesting that the problems that led to the bank collapse is the same problems that the savings and loans guys did. Same problem with the microfinance. So it appears to be something like a systemic thing, which required the approach they used. Now, I do know that some of this work started with asset quality review in 2015 under the NDC. So you should know that the asset quality review did show that there were some systemic problems, particularly with capitalization with the banks. Having said that, are you still saying that this was not the best approach to use? Based on all that he said, based on the historicity of this issue, you still don't agree that if you look at corporate governance, lending to each other, the behavior of shareholders taking funds owned by the depositors to do their own business, could you run a system with these people? Was it not better to bring in a new team so that you have a more solid corporate governance management?
You see, receivership is not about a living company. So the issue about bringing new people doesn't arise, because immediately you appoint a receiver, you have basically announced the death, you have asked somebody to supervise the burial of that company. But you see, I have a big challenge. One, Unibank and Co. The law is quite clear that you cannot take a bank under administration without inventory of assets. So for him to say that he didn't even know the assets,
the full extent.
Yeah, no, but you need to have inventory of assets properly identified from the very place that he came to be
the receiver.
Yes, KPMG.
And he's from PwC, actually.
PwC, fine. And KPMG didn't have inventory of assets. That is problematic. So quite clearly, you couldn't have even taken the bank, because it is a requirement in taking a bank under receivership. That is one. Two, how do you define insolvency? Insolvency is not the asset on the face value of on the books of the company minus its liabilities. No. The law requires that before you can arrive at that conclusion, you need to value. You need to value the assets based on acceptable international standards and compare that to the quality of liabilities so you can adequately account for appreciation of values that are sitting on the books, probably at historical costs. So, Bank of Ghana now takes one of your reports. No valuer has valued any asset and says that on the face of what has been reported as the asset, as the value of this property, and on the face of your liabilities, you are insolvent. How did he arrive at that without valuing this property?
But Adongo, there are two ways of defining. You have insolvency and you also have liquidity.
No,
the guys were illiquid.
I am not talking.
So, no. You see, you are using just one. No. He said we do asset versus liabilities, but we also look at whether they have money. They are liquid enough. They were not liquid.
You are not even understand what I'm saying.
No. He said that they are.
I am saying that insolvency as a basis of taking a bank is a technical legal definition. And that technical legal definition is valuation of assets and liabilities in order to determine a gap that we call insolvency.
Yes.
To the extent that you did not do the valuations, you cannot pronounce insolvency.
But has he said he didn't do the valuation?
He said we're all in Ghana here. Look, ask all the shareholders. If they don't even have inventory of assets for a bank and the administration, so they just take your balance sheet. Your balance sheet is reporting total assets 10,000. Your liabilities are showing 15,000. You are insolvent by 5,000. I am saying that is an illegality because the Banks and Special Deposit Act quite clearly defines how we arrive at insolvency.
But
do you get what I'm saying?
Act 930 also gives the BOG the power that based on an assessment, if within 60 days a company is unable to pay its debtors, they can declare the company insolvent. This is Act 930.
And I'm saying that Act 930 will now determine that based on valuation.
So you are insisting they didn't do valuation?
They didn't. That is one point.
But okay, what about the companies that were...
Second, Bernard, corporate governance should not kill a company. If directors who are in a fiduciary relationship with the organization are misconducting themselves, who is the victim here? The bank. So who do you go after? You go after the victim?
No, the shareholders.
No,
because they are supposed to be fit and proper to run a bank.
The shareholders are basically what we call caretakers, who are in possession of a child. They have brought forth a child. They are supposed to take care of the child appropriately. If they don't, we take the child away from you and get a good father for that child. But we don't take the child away to firing squad.
So you keep the bank and you change the shareholders, or what do you do?
Yes, you keep the bank.
But that's what they've done, in a sense.
But you don't appoint receivers for a bank that is alive. So you kill the bank. That's the point I'm making.
You use the remains to form a new bank.
No, you can't. So you see, when you kill a goat and somebody comes to say, I want the leg, somebody says, I want the intestines. Can you put them together?
No, but the assets and liabilities are still part. Because, for example, if you look at both UT and Capital, when they did a purchase and assumption, part of UT and Capital's assets and liabilities are into GCB. You see, so even though the goat is dead, it's still part of a new entity.
It is only part of soup you prepared.
No, but you can't use a soup analogy for a bank.
You see, a bank is a living person, an artificial living person. And that child was born with a license of incorporation and a license to commence business, and was given rules under which it must live in order that its license, which is the birth certificate, exists. Now, when you appoint a receiver, you are on your way to delivering a death certificate. Do you get what I'm saying?
I do, but the assets and liabilities still transfer to somebody.
No, but we don't deliver death certificate for a living person. So the fact that...
But a bank is not a natural person. So you are using the wrong analogy.
Bernard, I am saying that once you revoke and you appoint a receiver, the bank does not exist anymore.
But the assets and liabilities still exist.
But the assets and liabilities don't form a company. A company is a going concern.
But you said the shareholders are supposed to change.
Bernard, I'm saying that, yes, as a going concern, not identifiable assets and liabilities. That is not a company.
But the license is given to somebody. So if that person is not fit and proper to hold a license, how do you maintain that? So how do you do it?
Okay.
So somebody is a shareholder, he's misconducted himself. What do you do?
Let me give you an example. When they took the shareholders of ADB away from the owners for supposed breaches, did they kill ADB?
Fair enough.
I'm asking you, did they kill ADB?
Fair enough.
So there are several examples.
Fair enough. I'll leave that here. Take a short break. I have a lot of messages for you. People want me to ask you questions about debt. They want me to ask you questions.
No, but this matter we haven't finished. This is a major matter.
Oh, okay.
It's a very serious
But I have
matter.
10 minutes, so we have to manage it well.
It's a very serious matter.
I will take questions for you on debt and also some other issues. Stay with us. This is Point of View. Don't go away. Welcome back to The Point of View. Here are a few comments for Adongo. Hello, Bernard. I am Bola from Asin Fosu. And to be honest with you, I'm pleased with your guest today. He's really made my night, and I pray God grant him more strength and knowledge to continue to let us know the reality of the economy. Well, he says you have the reality. He doesn't. So you should tell us. From Otumfo, the convener of Crossfire Ghana, the man is a genius. Watching him improve my understanding of basic economic factors. We need a holistic discussion like this always. Bernard, your guest is informed, but his approach to giving out information should be devoid of emotions and sentiment. Bernard, call Adongo the economy of Ghana. Honorable Adongo is down to earth. His analysis are uncontroverted. Fred from Adenta. Bernard, listening to Adongo, it clearly shows that our economy is not doing well at all. You can see it even in the private sector. They are unable to pay their staff well. All right. Two things. CDD did a research that they launched today. They showed me something about the banking sector. Public perception about the banks is mixed. Again, financially, on the financial sector is mixed. 85% of the respondents had confidence in the banks, but not same for savings and loans and microfinance. Can we use this to say that the reforms have been mixed? Because people, when they ask them, where will you put your money? More of them preferred banks, had confidence in mobile money wallets, and then savings and loan and microfinance weren't doing very well. Is that how we should see the financial sector results? As a mixed?
No.
It's not mixed.
It tells you that the reforms has failed. You know,
In why?
You are supposed to deepen the financial sector. And when we say deepen the financial sector, you are working towards financial inclusion. So there are certain people in Ghana who ordinarily, their first point of call is microfinance. If today they've lost confidence in the microfinance, you don't expect them to migrate to the banking sector. And there are those who are comfortable with the savings and loans because the savings and loans bridge a gap between them and banking sector. So if there's no confidence there, they will migrate to the banking sector. And then the finance houses and the security regulated areas. So when you have all these sectors collapse, and you are now standing on one leg in the financial sector, then you have reversed all that we have achieved in the last 40 years. And we will need to do a lot of work in order to bring back the entire structure of the banking, the financial sector, in order to deepen the sector. And that will take a long time. You see, it will be like the way people put those days when they were collecting people's money and they put under their pillows.
But to be fair, when they asked them about keeping money at home, most of them said they will not keep their money at home. So a lot of people still believe that.
What is the evidence?
This is the result.
They have answered, but I'm saying, what is the evidence in the sector? Because I am saying that if they've lost confidence in microfinance, in savings and loans, in finance houses, in
No, they didn't do finance house. They just said savings and loans and microfinance.
So fine.
Yes.
So where should the money be going? The money should be going to the bank.
To the bank,
So
yes.
you should be seeing...
And mobile money wallets.
Yes.
And that's growing.
Yes, but I'm saying that you should be seeing a growth in banking sector deposits.
But you are seeing a growth in mobile money. If you check the latest mobile money reports, the guys said they will put their money in bank, mobile money wallet. And mobile money is growing.
You see?
That's also part of the financial sector,
Bernard,
is it not?
Bernard, we are saying that mobile money wallets don't create the savings that we need in order to lend to grow the private sector. No wonder Bank of Ghana is now directly getting involved in asking our banks to risk their prudential reserves in order to fund risky SMEs. So you see this enterprise credit scheme. Government is not putting any penny there. The banks are supposed to put 10% of their capital into what we call primary reserve, which is basically their shock absorbers to ensure stability. Now Bank of Ghana is saying that you are not lending, private sector is not getting money. Please, we are begging you.
Let me read something finally for you on this.
Money.
Your IMF, you said I shouldn't talk IMF, but I'll read it. The same document, they said extensive supervisory and regulatory reforms and interventions of programs like Bank of Ghana are boosting financial sector resilience. They give two examples. Capital adequacy ratio continues to improve. 21.9 as at end of 2018, an increase of 330 basis points. And the system-wide NPL ratio is also steadily declining since its peak in 2018 April. This is IMF.
So, Bernard,
they are saying that the cleanup is working.
I like facts. So 21%, where are we now?
Well, this is a figure I have.
Yes, 21% as at the end of 2018.
Yes.
Right?
End of 2018 was to 18.2, and it's improved to...
In January.
I'm coming. This is March 2019.
Good. Today, where are we?
You should tell me. I don't
Bank
know.
of Ghana just released a report, and I can tell you can discount that figure by 3%. And even that figure is 18%. So if you move from 21% to 18%, what does that tell you? The banks are already losing their capital. What is... are you getting what I'm saying? They are already losing their capital. One, because... I
don't know why.
Oh, that's what it is. If you are improving your capital adequacy should be going up. It should not be declining.
And you're saying the figure you have is what?
It's about 80%. And that 80%, as of June, as at the last 3 quarters of ending June, that is the one the Bank of Ghana came and manufactured and added 3% across board. So that 3% is sitting in the 18%.
Let me ask you a final question.
So if you take that out, we are now doing 15% from 21%. So the banks are collapsing now.
What is a Mahama government going to do different on the economy? You have just a minute. What are you going to do different on the economy?
On the economy?
Yes. What would be your approach different?
We will go back to the basics.
Okay.
The basics is to improve deepening of the financial sector in order to make more credit available to the business community.
Okay.
And that will begin to create more jobs. All this syndrome of unemployment is because for 3 solid years, the SMEs have not received funding. The private sector has been starved of funding and they are unable to produce. That is one. 2, we would introduce very basic common sense. That common sense is to ensure that we improve our fiscal management by ensuring that we generate more revenue, not what they are doing today. Every day it is the same measure. Then they value that measure. It doesn't achieve anything.
We have to do part 2. Viewers,
in fact, part 3.
Viewers want me to bring you back. So this is Adongonomics part 1. That's how we label it. We'll give it a few weeks and bring him back to look at the NDC alternative on the economy. I hope you've enjoyed it. I'll be speaking to MP for Bolgatanga Central, the purveyor of Adongonomics. Honorable Isaac Adongo, you're a big man, Charlie. Thank you.
My good friend.
No, you're a big man.
You are the biggest. You bring me here to drill me like this.
Please stay with Citi TV. We'll be back with more programs. Good night.